Good morning, traders. This week opens with oil markets tripping over themselves. As OPEC boosts output, prices keep tumbling. If you thought geopolitical risk was going to keep the floor under crude, think again. Diplomatic talks between the US and Russian leaders have traders dialing back expectations for fresh sanctions. India's still gleefully buying up Russian barrels, and US crude exports slip to multi-year lows, especially across Asia. If you're trading oil, the path of least resistance remains down, fades into rallies, keep stops tight, and watch for surprises from real OPEC compliance rather than chatter. US inventory drawdowns simply aren't cutting it against the supply overhang and softening demand. Stay nimble and don't get married to upside bets. In China, refiners are processing more but still managing to squirrel away surplus oil into storage. Don't expect a big import uptick, especially with Saudi Arabia hiking its September offers and China possibly paring back future shipments. If you're trading Asian benchmarks, monitor Chinese product export flows. High refinery runs suggest regional product prices could see pressure. On the grain side, let's say the only thing growing faster than US corn are traders' headaches. Grains are under pressure after record US crop outlooks. For wheat and corn, consider fading any weather rallies. With supply swell and macro headwinds, upside is limited. Momentum is not your friend if you're long. Soybeans have done better, but unless Brazil suffers a major policy or weather disruption, keep longs tactical and tight. Metals are where the action is. Silver is up nearly 4% this month, outpacing gold, riding both industrial demand and hopes for a friendlier Fed. If you're trading silver, look for continued upsides as long as global manufacturing data holds and the dollar stays soft. For base metals, all eyes are on China. The nickel market just got a jolt with MCX in India launching a rupee-denominated nickel futures contract. This move gives local industry a solid hedge. So if you're exposed to Indian export demand or global nickel price risk, consider using the new MCX contract as portfolio insurance, a perfect match for EV volatility and supply chain chaos. If you're trading gold, don't chase. It's still stuck on a $200 range, waiting for the next macro trigger. For copper, policy noise is subsiding, but fundamentals are back in focus. China's trade data hints at stabilization, but mine supply wobbles in South America linger. Keep an eye on spreads and arbitrage. This week's action points are: be alert for energy downside sell, grain rallies into strength, ride the momentum into silver, and use hedging opportunities in nickel. And remember, in these markets, discipline pays. It's the people who chase headlines who pay for the round.